Good morning, ladies and gentlemen, and welcome to the ANEXO Group PLC final results investor presentation. Throughout today's recorded presentation, attendees will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. And I'd now like to hand over to the management team from ANEXO. Alan, Nick, Mark, good morning.
Hello, morning everybody. I'm Alan Sellers. I'm the chairman of the ANEXO Group.
Good morning everybody, it's Mark Ringlow. I'm the CFO for the company. We just turn over to the first slide.
Yeah, we've set out on page 2 what the group does, and you can see there that we're a combined credit hire and legal services group. To the left, we've set out our speciality in credit hire, where essentially we act for the impecunious or non-fault accident motorists by providing them with replacement vehicles. Our fleet is primarily cars, motorcycles and taxis. Unlike others, we specialise in dealing with small independent introducer garages rather than main dealerships. We cover both repairable and written off vehicles, and as you can see there, the vast majority of our work is with motorcycles, particularly in the courier community, such as fast food, etc. On the legal services division, which is Bond Turner, we act to recover the costs and compensation from the at-fault motorist insurance company if the client has any associated personal injury or special damages claim. We add that to any claim for hire and repair. We have a specialist housing disrepair division, which is primarily also for the impecunious client. Many of you will have seen that we have several group actions at the moment involving diesel emissions. Primarily last year we dealt with the VW emissions, and currently we have a large number of manufacturer claims which are ongoing. We also have a professional negligence and clinical negligence team and a large catastrophic loss team in respect of catastrophic personal injury. If we can take you over to page 3, we set out there the investment rationale for credit hire. Essentially, the business provides access to justice for the impecunious client, particularly since the demise of legal aid in such claims over 20 years ago. The fact that we act for the impecunious type of client means we can charge credit hire rates rather than spot rates from somebody like Hertz or Avis. And we've set out there, which is perhaps a staggering statistic in respect of the impecunious base, that 11 million adults in this country don't have a credit card, which makes it nigh on impossible to hire a car. 16 million adults do not have the reserves to meet an unexpected bill of £300. So you can imagine what an emergency situation such as a road traffic accident would cause them. 8 million adults are in need of professional advice on their debt. 12 million are on the edge of serious debt problems. We've also set out there the size of the gig economy. There are 7.2 million gig workers, of which 3.7, approximately 50%, are involved in driving stroke courier work, and that's forecasted to grow at the rate of 7% per annum. We have, and this is the strength in the group, very effective vetting and in-house databases, which leads to a less than 2% failure at the trial of any cases where litigation is commenced, and the vast majority of our cases settle prior to any court hearing. Over the page, we've set out the investment rationale for other parts of the group. housing disrepair, significant marketing, generating high returns on sales and capital. Our revenues are up by over 36%. We also, as I alluded to before, carry out emissions litigation with up to 11 million vehicles impacted by the effect of diesel emissions. We reached an agreement in June last year with Volkswagen, which resulted in a net cash positive position of 7.2 million for the group. We've got ongoing claims against Mercedes and a list of other manufacturers, which totals circa 34,000. The litigation in respect of Mercedes, court proceedings have been commenced. There's already been several hearings, and in respect of other manufacturers, there are other court hearings timetabled over the course of the next 18 months. All our marketing costs of acquisition and legal costs are expensed as incurred. Over the page on to page 5, in all the areas of our work, particularly the impecunious, there are huge growth potential. In respect of credit hire, we've set out there the number of licensed vehicles and motorcycles, the number of personal injury accidents, and in 2018, the Ministry of Justice estimated that there were 700,000 road traffic accidents. In 2014, when the CMA carried out a review, it was estimated that there were 300,000 credit hire opportunities, and we have approximately a 2 to 3% market share in credit hire. In respect of legal services, we have set out there some statistics in respect of the number of homes in the UK. 4.4 are private rentals, 4 million are socially rented, and it's believed that 1.44 million of rental homes fail to meet the decent home standard. 728,000 approximately have damp and mould. In respect of the large loss and professional negligence team, we have the emissions, which I've mentioned before. We have clinical negligence, and you may have seen in a recent RNS, we're involved in the Letby case, both in terms of the statutory inquiry and the professional negligence claim. We are also involved in a group accident following the COVID negligence of the NHS during the COVID period for failing to provide the staff, such as doctors and nurses, with adequate protective equipment.
Just turn everybody over there to page 6. We've just set some of the key financial highlights there for you for FY22 playing FY23. The group has a December year end. As you can see, some significant progress in all areas. Revenue, gross profit, operating profit, all ahead of where we were at the same point in 2022. I would point out that the FY23 results include the effects of the agreement with VW. So we've got revenue, obviously a gross profit and an operating profit included in there. And as Alan mentioned, that claim generated a net cash positive position for the group of 7.2 million. Slight reduction in profit before tax, as you can see, down from 24.1 million to 23 million. And on the following page, I'll just walk you through some of the movements that we've got between our two key principal divisions, being the credit hire division and Bonturn, the legal services position. Adjusted profit margins increased from 21.9% up to 26.6% in 2023. And one of the most important factors for us, I know we talk around cash collections in our presentations and our accounts. These are funds that our legal services teams have collected, retained in the group. These numbers don't include damages that we collected for our clients and don't include any settlement associated with the VW arrangement that we reached in 2023. It is a tale of two halves, and I'll walk you through what we've been doing in 2023 and into 2024 on the following page by division. But the focus very much for 23 was, a stabilization of the group. Net debt, as you can see there, is a primary focus for us to maintain or at least reduce. the number falling from 73.1 million at the end of December 22 down to just under 68 million at the end of December 2023. We've proposed a dividend again of 1.5 pence for the year, same as the prior period. Just turning over to page 7, and we've set out there the movements between the two key divisions. And just picking up credit hire first, you can see a quite significant reduction in revenue between 22 and 23. And really that is all around management intervention. We heard on our roadshows in previous periods, the feedback from varying investors around looking to prove to the city that we can generate cash rather than just being a continual absorber of working capital. So as you can see there, with bringing revenues down, we've actively managed claim activity pretty much through the first 8-9 months of the year. Obviously, having come to an agreement with VW and the cash that allowed us to generate, we've significantly increased activity towards the back quarter of 2023, such that vehicle numbers increased from 1,700 at the start of the year, dropped as low as 1,400 as we were actively managing the number of claims that we wanted to take on, and then jumped up in the final quarter quite significantly. And in, I think, November 23, peaked at over 2,500 vehicles on the road. So the average vehicle numbers don't really tell the complete story. It's that final jump in activity in the final quarter that really brings the number very close to what we did in 2022. Those cash collection numbers that we presented on the previous page, really supported by the teams of people that we've invested in from a bond turner perspective. Case settlements, and this is just credit hire cases, increased from just over 7,900 to just shy of 9,000 between 22 and 23, an increase of 13%. And again, with that cash that we are generating, both from the VW position and also the increased cash from not just credit hire, but large loss and housing, as Alan's described, we were able to fund an extra 17% of cases, so just shy of 10,000 to nearly or over 11,700, supporting people with a non-fault vehicle. Credit hire really is the mainstay of the group. It continues to be a hugely significant part of the business. As Alan described, the motorcycle side of the business is now far more prevalent than it ever has been. In 2022, we were looking at around an 80-20 split between cars and motorcycles. With us actively managing claims, and a motorcycle claim has less revenue, hence some of the drop shown on the page 7, but it generates a better margin and it takes far less working capital. So in 2023, we deployed capital to probably it was more like 90-10. So out of every 1,000 claims, 900 were associated with a motorcycle proposition. One of the things that we started to do as well during 2023 is consider other areas of opportunity for credit hire. We've, towards the end, recruited a gentleman who has a large amount of experience in the provision of credit hire vehicles to taxis. And Bond Turner had been working with his former business for a number of years. He joined in October, November, and we started accepting claims very towards the back end of 23, moving into 24 from a taxi perspective. And they tend to be, the rates are good and positive. The claims tend to be more valuable for us. So we're actively managing the number of vehicles that we have on the road from a four-wheel perspective and flipping into taxis. As we sit here today, and Alan will have a statistic on his current trading slide, but we've got around 2,000 vehicles on the road. Around 1,800 of those are motorcycles, and around 200 are four-wheel vehicles, vans, cars. And at the minute, we've got 37 taxis on the road. So from a relatively quick start, looking at that significantly increasing and driving profitability into 2024. With that 2,400 vehicles on the road and that really ramping up towards the last couple of months of 2023, gives us a fantastic platform for profitability into 2024. All of the acquisition costs associated with those vehicles have already been incurred and expensed. So we're expecting 2024 to be a positive position for the group into that year.
Then moving on to,
Sorry, just on the right-hand side of the page there, just talking about Bond Turner and the legal services side. As I mentioned, the agreement that we came to with VW has impacted that revenue number. Clearly, as we've spoken to a number of individuals, we're subject to confidentiality, so I can't give you the detail of the breakdown. But there's clearly been significant movement alongside VW in credit hire, as I've just described. We've grown legal teams across both large loss and housing, and overall staff have now peaked at over 700. Senior fee earners, those guys that are generating settlement and cash for us, have increased nearly 12% by 30 heads from 253 to 283, and will continue to grow.
And over the page on current trading, as Mark said before, the split in credit hire is now 90-10 in favour of motorcycles. As at the 30th of April, we had 2,030 vehicles on the road on hire. Our HTR team continues to expand, and we're regularly seeing repeat claims due to the failure of landlords to comply with court orders. There is an emissions hearing listed for October 24, and obviously that is progressing the case towards a final hearing.
Just picking up on that emissions point, we invested around 4.3 million in marketing and staffing costs in emissions, and as Alan described, we got 34,000 claims. Again, should we be able to settle those claims in the future, maybe late 24, 25, all of those costs really have been incurred and reported in the numbers that you've seen today. So there's a significant upside that we obviously have yet to report. We don't have any revenue or accrued income associated with those emissions claims moving forwards. And just a statistic around the large loss teams, significant investment again in 2023. The number of cases where we have an admission of liability has increased from just over 300 to now over 500 in a 12-month period as we continue to expand and develop that income stream for the group. And many of those cases take multiple years to settle. The team now has been going for a number of years. We recruited a lady a number of years ago who's now a director of Bond Turner. And as those cases mature and come to fruition as they are at the minute, again, there's significant upside for the group when those cases settle. Fees tend to be tens of thousands, hundreds of thousands in these significant injury cases. Just moving on, we've got page 9, 10 and 11, which is just the three primary statements for the group as reported in the RNS. Don't propose to go through those in any kind of detail, other than just on the cash flow there on page 11. Net cash flow from operating activities was outflow in 22 to a significant inflow of 17 million. So our movement of 20 million between those two periods, and something that the management team, in holding back activity from a credit hire perspective, have very much been focused upon is bringing that debt number down, investing in as many new claims as we can from our own funding facilities without the need to increase that debt balance. And that concludes the end of the presentation. Alan, do you want to just conclude?
Yeah, so I think overall it's been a very pleasing year. As we said right at the outset, our effective management has led to increased revenue, improved cash flow, increased margins and case settlement without increasing debt, and in fact reducing debt. So overall we're very happy. But obviously there are some issues that are outside our control, particularly with regard to court delays.